did talk about shopping the line for value. We have talked about selections and picks and how you could have an edge, and finding a sharp book that gives you the real edge, and then trying to compare that information. And then we talked about money management. So let's dig into that, because I think what you're getting at is, okay, I've got this 1 in 9 day, but I didn't manage my money properly. So now I'm out. So I've got this, the gambler's risk of ruin. So how do you, let's dig into the money management a little bit. How do you suggest people do that when they're taking their bets? How much of their bankroll should they be betting? How much, walk me through that.
I keep it so simple for people, you know, keep it simple, stupid, right? And in this industry,
you're talking to me. You're talking to me. You got the right audience right here. I'm right here.
You're about 99.9 percentile higher than most of the people I deal with. So it's a compliment. It's also not a compliment. But I'd just say 3% of bankroll. I've come to realize it's the simplest way. And, you know, Rodrigo, the Kelly criterion, of course, transfers to both sports betting. And that's another thing. We talk about the history of this point spread in the 40s, the 1950s. The Kelly criterion was a guy working for AT&T or Bell Atlantic, and was actually to overcome statistical like noise on a phone line or something. And they, you know, the gamblers ran with it. And of course, Ed Thorpe in the early 60s, the card counting. So 40s, 50s, 60s was a heyday for this stuff. And wouldn't all three of us have loved to have been alive back then and taken advantage of this before the general masses caught on? But I mean, the Kelly criterion, I think 3% of bankroll is like if you only have like a 53% win percentage. So I'm very conservative on that. I honestly can target 55, 50%, 6% long term. I think the Kelly comes out to about 7%. I rate my games 3, 4, 5% of bankroll. I don't even release 4 or 5% anymore, because the problem I found, even though I think a game is worth 5%, it's maybe the strongest play I've seen that month. It's just got more of a mathematical edge. People don't play it as a 5% because you're giving them 3% all week. They get a 5%, then it becomes a 20% play to them. So they're just there again. I err on the side of caution because I want everyone to live to fight another day, because I know how statistical runs can go. But yeah, I keep it simple. I say 3% of bankroll, and if a game has an edge, we use it. You know, we might play 2 or 3 games only on a Saturday or Sunday when there's 50 on the board. But I've found that works very well. The win percentage will be a little higher. And that's the most important thing, because these still are recreational players who are looking to have fun first, and they want to have an edge also. And the way I look at it is they have a fighting chance if they follow what I tell them. Hopefully some of them do. And the ones that do have been with me 10, 20 years, and they treat this as a form of investment. And, you know, I don't want to sound insane here, but if you look at 3% of bankroll and you pick up 20, 25 units, that's a 70, 75% return on investment in 1 year. So, because you're rolling, that's the good news about rolling it over every 3 hours. It can be bad news when you go on a cold streak, but when you get hot, you can compound money very fast.
Very interesting. So
that is great. Yeah, it reminds me of
down the rabbit hole.
Vol sizing. You know, as he's talking about the bet sizing, it's like a volatility sizing based on the outcome. You know, you got to take all the bets. You should be taking all the bets. Don't try and cherry pick them, or you end up like
that's such a great point. I mean, that's actually a great point, Mike. I wouldn't have thought to bring that up. I was going to say earlier, someone will call me on after a 4-2 weekend and they lost. I'm like, how the hell did you lose? We went 67%, 4-2. I mean, obviously it's 6 games, but if you go 67%, you'd be a millionaire within a year. And I was like, you transfer that over 17 weeks. If we keep getting 67%, you're going to retire. And, well, I tripled up on the Sunday night game, the final play, because, you know, so it's all money management. Or we go 3-3 and they get ruined. I'm like, you lost like a teeny bit of juice. We broke even basically. They're like, well, I tripled up on the Monday night game, you know, because I didn't want to have to pay out that week, you know. So they go from maybe owing $10 to several $100. But
behavioral.
But the cherry picking is a great analogy, though, and I wouldn't have thought of that. That's another thing is, you know, people like we go 4-2. I got killed this weekend. How'd you get killed? Well, I didn't play that game because you're on that team that's 0-10, and I just couldn't trust them. You know, and those are the games I love, by the way, when nobody wants to play them. But yeah, people don't get out of their own way. So my good long-term clients have been with me for decades. They set it and forget it. They take 5 minutes a day. They get my updates, which are sent by email, and they make the plays. And it's that simple. Now, I do put analysis with my games, as you mentioned earlier. And the reason I do that is because I have professionals using my service, and they do want to pick and choose. And there's nothing wrong with that. And I'd like people to be able to get multi-uses out of the service. So I back it up with analysis more than doing their own handicapping. So there's nothing wrong with doing it that way, but you have to be responsible.
It's amazing how you provide the analysis. And in some cases, that's not going to be useful. It's that old. I'm sure you're familiar with the horse handicappers, and they give them a limited amount of information, and they were so accurate. And then they give them more information. They became more accurate more accurate, but they became more confident.
Right.
That's
right?
a good
They
point.
weren't more accurate. They were more confident in what they were suggesting. So you give them a bunch more information and they end up saying, they would pick the same winner, but they would directionally be more confident because they had this information. And the information, the reality was the information wasn't providing extra edge. Yeah, it wasn't accretive. So it's really like, it's a great behavioral discussion because it just goes to show the reliability of the behavioral vulnerabilities that humans have when we come to probabilistic thinking. It is, it's just everywhere.
Well, and unrealistic expectations too. And you guys run into that all the time, I'm sure.
Yeah.
If you hit 60%, and I've had some seasons within a sport, I'm not going to do it over 700 plays a year. I'm not going to hit 60%. I don't want to. I'd rather hit 56% over 700 games than hit 60% over 50 games. You're going to make more money net. But on an NFL or an NBA season with 50 or 60 games, I've had several years I've hit over 60%, over a smaller sample. But if you ask the amateur bettor, not only do a lot of them not like 60%, they won't even want to use you, but some of these guys think 70, 80%. Because as you said earlier, Rodrigo, like the movie with McConaughey, the boiler room mentality, they're telling them they got locks of the century. They're saying 70, 80% is their win percentage. It's just, I will say it's gotten better. That's a big change, by the way, guys, from when I started in the 90s. I was competing against that in the 90s. The amateur, the square, is much more sophisticated and knowledgeable and informed than ever in history. That's one good thing about the information being widely available. And I think there's less people now that fall for that. There's still some to do, and that's just human greed, and that's another thing we can always dig into. But yeah, right now I do think the expectations have become more reasonable, which is a good thing for someone like
me. Happened everywhere, right? The internet's done that. I mean, in poker as well. Everybody I speak to plays a little bit of poker, knows a little bit of the game, has improved they're not complete fish, right? And in investing, you've seen more and more people just realizing that if you're not the shark at the table, you're the fish, and if I'm the fish, I might as well just buy passive.
Right.
Long-term, low cost, work on my low cost, make sure that I'm not making any decisions whatsoever, and hopefully try to just be the house, right? Garner the global growth over time. And so you are seeing a lot less people making tactical errors in the market. But at the same time, you just see it on Twitter right now. A lot of people have made money over the last 3 weeks, right? Because there's been moves in equity markets without the need for leverage that has provided you outsized returns if you got the right move, right? And this is the type of stuff that gets people overconfident and makes them, they haven't realized that they weren't making big bets. I mean, the truth is that the market's volatility is kind of like how you should think about the bet size, right? If the volatility of the market is going up and down 0.5% a day, and you're placing the same amount of money at play most of the year, you're getting one type of bet, right? But if the volatility of the market all of a sudden is 5, 6, 7, 8 times higher than it was any other day, it's moving up and down 5% a day. You're placing a much bigger bet than you think you are, and it's basically the equivalent of levering your portfolio 5 times the previous year when it was much calmer, right? And so you have this massive levered opportunity, this ridiculous outside rebound for the market, and you participated in it. This is the type of stuff that makes people be like, well, I can do this on my own. I don't need any advice. I know I don't need to think about it. I've got this covered. And then they extrapolate their bankroll too, right? I 3x my returns over the last 3 weeks, and therefore I'm going to be a millionaire in about 2.5 years. And they're going to start placing the same amount of bets in the portfolio. Eventually they get caught, right? So it is that overconfidence element plays across all of these.
Well, it's the short-term thinking. That's the thing. And Mike referenced that earlier. It's so hard to be a long-term investor in the sports market where everything is decided within a 3-hour window. And just statistically speaking, you're going to have hot and cold streaks. So like you said, Rodrigo, you go 5-0 that weekend. Man, what do I need Steve Merril for? Steve Merril went 3-2, which is 60%, by the way. I'd be retired by now if I hit 60% long-term. And so, yeah, there's always that mindset. One thing I want to bring up too, though, the difference between the financial markets and the point spread, it made me think of this as you were saying, that is, momentum is a serious investing tool where you can ride price action. Sports, it's totally different. We have what's called chasing steam. And back when they're called wise guy moves in the 90s, you would see the odds screen just light up and all the lines would move a point or so at the same time. And that's because the big betting syndicates were hitting the game. And they'd play them all at different locations to get the bet in at the line. And a lot of places move on air, which means they'd actually move their point spread without action because they know that sharp money came in somewhere at like the Stardust, for example.
Right.
And then you have people what we call steam chase. That's called a steam move is when it would happen. The steam chasers would jump in because that is the correct side to be on. But the problem is they're getting it after the fact. So they're playing a game that the pros just played at -3 in the NFL at -4. And that's a 10 to 15% disadvantage, as we talked earlier, because 3 and 4 are both key numbers. It's the same thing in stocks, obviously. You jump on after Warren Buffett announces he's on a stock or something. The difference, though, is that it's a longer-term hold in the stock market, and momentum does work, as you guys know, with trend following and other things. That's one difference I've seen in the sports market is that price action. It's so important shopping for that line value, as we talked earlier, and that's
right. It's more of a discrete event rather than a continuous event.